Nike reported their Q2 results in the after hours. The shares are dropping nearly 5.5%, giving up all of their year-to-date gains. We'll jump into the revenues, the earnings, take a look at the all-important Greater China, how that performed, jump into some valuation and earnings estimates over on Wall Street, and then as always, take a look at the technicals for Nike. This one will likely post a big red candle tomorrow. We'll see if this uptrend is finally broken and identify some good points where I think you can come in here and pick up shares of Nike. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. We have a lot to get into, so let's not waste any more time. Nike's revenues coming in at $13.4 billion. That was up just 0.5% on a year-over-year basis. That did miss estimates on Wall Street by roughly $40 million. And on a constant currency basis, these revenues actually were down 1%. And so certainly when you have inflation running rampant at over 5%, these revenues not even keeping up with inflation. I think that was a big story why these shares are declining so sharply in the after hours. Now, from an earnings perspective, GAAP EPS coming in at $1.03. That beat estimates on Wall Street by roughly 18 cents. So a pretty substantial beat if you take a look at from a percentage number. And we'll get into more on the earnings in just a second. Taking a look at revenues, you have Nike Direct revenues, which is a higher margin business over at Nike, as that's their direct-to-consumer business. That was up 6% year-over-year, up to $5.7 billion. Nike brand digital sales were also up 4%, but your wholesale revenues, which is $7.1 billion, that came in down 2% year-over-year. And so your Nike Direct and brand digital sales were up, while your wholesale revenues, which is a lower margin business, was down. That will certainly help your gross margins, which rose up to nearly 44.6%. That is up 170 basis points compared to same time last year. Now, Nike did announce an enterprise initiative to accelerate future growth, and let's jump more into that. So their CFO, Matthew Friend, did announce that they are looking ahead to a softer second half revenue outlook, but they remain focused on gross margin execution and cost management. And so the company is identifying opportunities to deliver up to $2 billion in cost savings over the next 3 years by simplifying their product assortment, increasing automation and the use of technology, and streamlining their organization in order to leverage the scale and drive greater efficiencies. And they also say a majority of these savings will be reinvested back into the business to accelerate future growth and innovation in order to drive greater long-term profitability. And so they expect in the third quarter of 2024, which is basically the current quarter we're in right now, to expect nearly a $400 million to $450 million restructuring charge that will likely go primarily due to employee severance costs, and they'll provide a revised guidance on the conference call. And so CEO saying we see an outstanding opportunity to drive long-term profitable growth and invest in our areas of greatest potential. And so you take a look at these comments made by the CFO to drive greater efficiencies. Sounds a lot like comments we've heard from other companies. You take a look at like a Salesforce or a Meta even. They've certainly drove more greater efficiencies in their business by restructuring the organization, tapping into more automation and the use of technology. And I think, like they said, that will drive greater efficiencies, again, continue to improve margins, which will ultimately help Nike's bottom line. And I think down the road, you can expect Nike Direct revenues, at least I expect Nike Direct revenues to pass their wholesale revenues. And since this is a higher margin business, you can expect higher bottom line profitability. And that certainly is an important thing for Nike shareholders. Now, Nike does also typically guide during the earnings conference call, so we'll have that. And companies that correlate to Nike, such as an Under Armour, a Lululemon, Foot Locker, these companies will certainly move tomorrow, including a Starbucks, as it's quite closely related to China. And so Nike certainly has a big impact on the market, will likely move a number of stocks, including Starbucks, maybe even an Apple in the market tomorrow. Now, taking a look at divisional revenues, we have North America revenues declining nearly 4% on a year-over-year basis. That's for the 3 months ended. Basically the same thing on a 6 months ended, down nearly 3%. You have Europe just roughly flat on a year-over-year basis, up just 2%. And then Greater China, which is actually holding up quite strong, in my opinion, up 4% on that total revenues. The apparel side of their business in China certainly helping profitability on that revenue side. I think Wall Street would have liked to see this number closer to $2 billion, but on a constant currency basis, this was still up nearly 8%. And so when you head into next year, these constant currency headwinds will likely turn into tailwinds for Nike's business. You still have APAC growing at a pretty good clip, up 13% on that revenue side. APAC almost coming in higher than China from a dollar perspective. We have $1.8 billion in APAC revenues and then $1.86 billion in China revenues. Certainly if APAC continues to grow at this clip, it's likely coming in to surpass China revenue sometime in this quarter or the next quarter. So that is important to notice. You have your Converse brand sales, which were down 11% year over year. And so that's certainly not helping revenues over at Nike. And your total revenues up just 1%. I think the big story was the greater China revenues not expanding really as fast as analysts on Wall Street would hope for. Now, what I think is important and should be considered is their bottom line growth. Certainly on a forward price to earnings, you might look at this and say at a 32 times, yeah, Nike is expensive, but I want to point out in this quarter, analysts on Wall Street expected Nike to earn 85 cents on a non-GAAP EPS line. To remind you, Nike earned $1.03. That was up 21% year over year. And so when your analysts on Wall Street are expecting 0% growth on that bottom line and Nike comes in with earnings up 21%, even the high estimate on Wall Street coming in at 95 cents below what Nike posted at $1.03. I think this is certainly overlooked far too much over at Nike. They come in with these consistent beats quarter in and quarter out, and not just small beats. This was a pretty substantial, nearly 21% beat on that bottom line. So when you have 28 analysts expecting Nike to earn 85 cents and they come in with a huge beat in this quarter, you can likely expect all of these forward-looking earnings to get bumped up. In the next quarter, they're expecting earnings growth of 25%. Again, Nike just posted a quarter of $1.03, coming in ahead of the third quarter estimates, likely, which is going to be seasonally strong due to the holiday quarter. I think this can be bumped up. Your your Q4 earnings will again likely be bumped up. And so your profitability over at Nike is always growing faster than what Wall Street expects. And so that brings down your forward price earnings in a substantial way. You're likely paying a sub 30, maybe even a 28 times a forward multiples on this stock. And so when you take a look at it from face value, yeah, it can look expensive from your sites like Seeking Alpha, from a Yahoo Finance. But when Nike is coming in with these consistent EPS beats by nearly 21%, that will certainly help your earnings multiple. And Nike is just a company that is always more profitable than you really think. Now, moving on to the statement of income, we have those revenues up just 1%. Nike doing a good job controlling the cost of your sales, down nearly 2%. And so your gross profits were up 5%, again, helping your gross margins on these higher margin Nike Direct and Nike brand sales. That is higher margins for Nike to pull through. And what that allows them to do is, even though their revenues are just up 1%, your net income was up nearly 19%, and your earnings per share up 21%, coming in at $1.03. Nike also doing a good job controlling your operating expenses. You see demand creation stayed roughly flat at 1% growth, and then overhead expenses, again, flat year over year. And so your expenses as a percent of revenue don't budge. Your revenues basically stay flat, but because these are higher margin revenues, you get to generate more net income and then again, more EPS. I think the margin and earnings story over at Nike is not given enough attention, in my opinion. Certainly, I think that will help this stock over the next few years. I really see this company as an earnings story more than a revenue story. And I think Wall Street still stuck a bit on the revenue side, that their revenues are really flatlining, not growing. I think Nike is really an earnings growth story more so than a revenue growth story. You also see your weighted shares outstanding declining as Nike has a pretty substantial buyback in place. They have a 4-year, $18 billion buyback, used up nearly half of that so far. And I think they have plans to continue to buy back shares. Certainly when your stock is dropping, they can likely do that. From a balance sheet perspective, all things looking good over at Nike. The important number is the inventories that declined nearly 14%, which is good to see. Nike able to move through those inventories. Certainly probably had higher markups, which caused those revenues to be roughly flat, but they were able to move through those inventories. Your total current assets coming in at $24.6 billion, well in advance of your current liabilities at just $9 billion. They paid off their current portion of the long-term debt. All things considered, balance sheet looking very strong over at Nike. They also have not a huge amount of long-term debt on their balance sheet, and so their cash equivalents roughly in line with long-term debt. Certainly not something to be overly concerned about. Moving on to the technicals, now in the after hours, I'm seeing the stock down nearly 7%. Certainly a big drop for Nike, trading closer to $114 a share. I've put in this fake red candle to kind of show you how big of a decline you'll likely see tomorrow. In the short term, really over the last 4 months, the stock is technically still in an uptrend, just looking to break that now. If you really want to consider this an uptrend, yeah, Nike can come in here and break that uptrend, likely posting a big gap down tomorrow. If this closes underneath $111, really underneath $114, yeah, you can almost consider this uptrend to be broken. Now, in my opinion, I think this is an overreaction. As someone who's actually looking to pick up shares of Nike at a cheaper price, I would love for the stock to break this uptrend, head lower, even closer to $110, $104. I would love to be able to pick up shares of Nike closer to the $100 range. I think these numbers were actually quite fantastic, especially from that earnings side, a huge earnings beat. I think the street is kind of taking too much precedence on this revenue side and probably not growing fast enough on that revenue line. I think this is a blessing that Nike shares are down substantially in the after hours. Certainly if you stretch this chart out back over the last 10 years, this is, yeah, still locked in a very well-defined uptrend. You can trace this back all the way to 2012, 2013. The stock is still in a massive uptrend. Really any major pullback closer to $104, even down to $90, the stock will still remain in this massive uptrend. And certainly I believe any major dips like this one we're getting can be absolutely picked up. I made a video on 5 stocks to buy for 2024, and I'll give you a spoiler. Nike was one of my picks, and certainly if this one continues to sell off, I would be more than willing to pick this one up. In 2024, I think you can see a rotation back into consumer discretionary names like a Nike, and with their pricing power, with their brand power, again, with a combination of disciplined cost management and more efficiencies, I think this company will continue to just be very profitable in the near future. You also get great dividend growth on this and trading at a pretty reasonable valuation in my perspective, sub 30 times an earnings multiple. I think really any major dip can be a buying opportunity. Certainly you have this one almost as a falling knife tomorrow, can probably continue to head lower in the shorter term. But again, I think if you are a long-term buy and hold investor, this is frankly a fantastic buying opportunity to come in here, pick up shares of Nike in the long term. Certainly this company is not going anywhere anytime soon. That was my take on Nike Incorporated. Let me know your thoughts on this one in the comment section below. Stock down nearly 7%. We'll see where this one closes tomorrow. Full disclosure, I currently don't have any shares of Nike, but as I mentioned, one of the companies I absolutely love and I'm looking to get into for 2024. Let me know your thoughts in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.